Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 5th of July, a new era in politics. Also looking not too bad on the FTSE front as well, in the sense that we've just breaking the 50-day line there around 82.50, end of day close above the 50-day line, and that red May resistance line will be heading up to retest the initial June resistance, 83.71. Obviously we've got the big prize of potentially moving up to the top of that rising October trend channel, 86.50, but one would imagine we need some fireworks to deliver that. On the downside, hoping that we won't get anything lower than 81.30, the floor of that channel, and obviously that's the recent support area down to 81.10. RSI at 55, so right in the box seat for moving higher. Next up is the DAX, and here we're also looking quite chirpy in the sense that we've pushed through the 50-day line there. That's around 18,400. Looking to break that May resistance line there at 18,700 and head up towards new higher levels. So obviously the record high was back in May, but the top of the channel there as high as 19,800, which could happen by the end of next month if we have a decent breakthrough that May resistance line. RSI at 59, so again right in the decent area for potential progress. Not expecting anything lower now than the floor of that rising trend channel around 18,200. So the DAX appearing to be set fair. Not so set fair is Bitcoin at the moment, although it may be that the low is in. We've hit the March support line there, March support line projection there at 53,000. And we're also very oversold. RSI at 24, that's the most oversold it's been since August last year. And obviously that was the start of the rally. So really for the bulls, everything relies on 53,000 holding and then a rebound back towards the 200-day moving average area, 58,500. If we do continue to break down, obviously there's the February 50,000 support zone coming into play, but hopefully this was it in terms of the downside. Looking at gold, which looks a bit like the indices for some strange reason, they've broken a line of resistance there from May and the 50-day line at 23.54. Above that, looking for a return to June resistance, 2400 plus, hopefully over the next couple of weeks, and ideally by the end of the month, even up to 24.50. The all-time high zone. RSI at 54, so that's also in a good place in the low 50s for further moves to the upside. Moving on to the stocks and starting off with Avacta, which is probably one of the best series of charting calls ever made here. We started off around the 40p zone, initial target 53, next one 63, and then yesterday calling for the top of the gap there at 67 pence. We've got a new target now, which is was the old support there from back in July last year at 88 pence, and that's also the area of the 200-day moving average. Hoping to see 88 pence by the end of this month, and ideally there's no end of day close now back below 67 pence, although maybe one would have to allow down to 63, the previous target. Staying in the same sort of area, biotech area, Angle is next, and here we've got multiple support points here for some reason at around 13.5 pence, and we've tested that many times, looking for an end of day close above the 200-day moving average at 15 pence, and then the shares to fill the gap down from June up to 18 pence over the near term. We're backed by the way that the 50 and 200-day lines are both rising, and also the fact that there's an uptrend line in the RSI window, so there's bullish divergence coming in there with those bounces off 13.5 pence. We already had two gaps to the upside, so it was a double bear trap gap reversal in April, and in a way we're following on from that, even though obviously we've had an island reversal for May, June. Moving on to Clontarf, which has been next to Avacta, one of the better situations here. We're in the run up to our golden cross. We've hit our target there at 0.1, well basically 0.115, and that was our second target. The first one was 0.07. Current situation is we're looking for what the next target may be, and that would be derived from the line I'm just about to draw now, which is heading towards the 0.16 level, and we're looking for that by the end of this month while we stay on the right side of 0.1. That 0.1 was also resistance on the way down back in August last year. On to Cavendish, and here we're toying with our ongoing target there around 14 pence, so we bounced off a rising 50-day line as well. We had a bear trap gap reversal to start the whole rally, so that also made sense. And looking for 18 pence by the end of this month, while we remain above the 50-day line at 12.5 pence. Next up is Capital Metals, which looks as though it's still too strong to fill that gap down to 1.5p. We've had multiple attempts at filling that gap, but the share's too strong, and that's a signal in itself. And that means we're looking for 2.5p while we remain above 1.5p on an end-of-day close basis. Devolver is next, and there seems to be all sorts of RNSs coming out here, but in terms of the charting, you can see that we've found support now at the top of that rising trend channel from back in June last year, 33p. The longer we stay above the floor of the gap at 30p, the greater the chance of move, now up to 46 or 47p by the end of this month. Moving along to a stock which has been one of the better explorer situations, which is Empire Metals, bouncing off a rising 50-day line again, just looking for an end-of-day close, rather a rising 200-day line, looking for an end-of-day close back above the rising 50-day moving average at 9p to resume the progress within that rising trend channel from October. 16p the target, maybe by as soon as the end of next month, although I suppose that you can see there's a lot of resistance in the 10 to 12p area, but maybe this is the time when Empire will finally break into the mid-teens. But ideally, we stay on the right side of 8p for the duration. Ferrexpo is next, not the type of stock we normally look at, but too exciting to resist. Here we've got basically a W-shaped rebound, broken through the 50-day line, and also recent May resistance at 49p. Above that, looking for 60p by the end of this month, or hopefully much sooner. There's also bullish divergence coming in there, so lower lows for May and June, but a higher RSI trace, so that gives the stock a pretty good look. On to Helium 1, which has done what we wanted it to do, and a bit more actually. Here we've got a situation where we were looking for 0.8 or 0.9 once, while we held 0.5p, the placing price. We've now broken that line of resistance, the February one there at 0.91. Above that, looking for as high as 1.35p by the end of this month. Obviously, a more modest target would be just for the shares to fill the gap there, the gap down at 1.03p over the next week or two. But key here is staying on the right side now of 0.76, the initial July support. Moving on to Image Scan, which is also keeping on with its positive momentum, rising 200-day and 50-day lines there. We gapped up, so it was a bear trap gap reversal, failed gap fill as well from April. So good signals coming through there. And basically looking for 2.9p by the end of this month, and hopefully sooner than that, while we remain above the old resistance there from May at 1.95p. So looking set fair there at Image Scan. IX is next, and here you can see that we have a potential bounce off the floor of that falling channel there. Support coming in on the last 3-4 sessions at 10p, and the longer we stay above 10p, the greater the chance of move to fill that gap up to 16p by the end of this month. But the key here, holding 10p. Powerhouse Energy is next, and here a bit of a rug pull from the May peaks, but looks as though the shares have seen the floor of that rising trend channel from February. The floor of the channel there around 1.2p, and really looking for an end-of-day close above the 50-day moving average at 1.32p to confirm that we can then go and retest the best levels of the year through towards the 2.2p area, maybe by the end of next month, and hopefully a bit sooner than that. Rockfire is next, and here you can see that we've pushed through the 50-day moving average, which is now rising. That's a bullish sign, and above the initial June resistance at 0.21. Looking for the shares to at least make it up to the 200-day moving average at 0.26 over the next week or two. Ideally, we get up to the top of the range and the top of that triangle there from September at 0.39p by the end of next month. On to the last two. First one is Surgical Innovations, and here the picture one of improvement, well, proper improvement in the sense that we've broken through the 50-day moving average properly for the first time since last summer. Looking for the shares to at least get up to the top of the rising trend channel base at 0.82p sometime later this month, and ideally we stay above recent resistance at 0.51 in the meantime. Finishing off with Touchstone, and here the shares bouncing off a falling trend channel there from November. A bit iffy in terms of whether the shares will just fail at the 50-day line, but if we can get an end-of-day close above that 50-day line at 34p, we could be heading up to 44p as soon as the end of this month. The other positive is that we've gapped up today and gapping up off the lows tends to be a decent sign of recovery. It's basically a bear trap gap reversal. That's it for me today. More updates over the weekend.